Now, all through the last number of years that you would have heard management conversations, you would have heard them speak, especially in the NBFC space or the financial space, speak about the necessity of having a granular book, about having a well-diversified presence, both physically and online, and having a strong brand association. And when a single company has all the three incomes out of the IPO, you take notice. In this case, the IPO from a pedigreed brand name with a very large size. HDB Financial is what I'm talking about. Mr. G. Ramesh, Managing Director and Chief Executive Officer of the company, joins us right now in our studios. Mr. Ramesh, great having you. Thanks for joining in.
Thank you for inviting me. Thank you.
At the outset, all the best for the IPO.
Thank you.
Just talk to us about the timing of why is it that it has come about this now? Was it in some sense good fortune as well that the Reserve Bank of India did the turn that it did, and it's all aided the whole sentiment around the space?
Right. So we are a 17-year-old company. We've been through a journey. We've been profitable. We have had growth. In fact, we've been profitable from our second year of operations, right? So we have had a good balance of growth and profitability. Today, we have 19 million customers. We have presence in 1170 towns with 1771 branches. So that's the scale of the organization, 1,07,000 crore balance sheet. We felt this is the right time, and anyway, the IPO is a milestone in our journey. And we felt this is the right time to raise capital. The last time we raised capital was in 2017, when our balance sheet was just about one-third its current size. So we managed growth of 3x without actually raising capital. So right time to raise capital plus upper layer. So all comes together, and this is the right time for the IPO.
Most certainly. Is the landscape looking very solid for the immediacy of growth? I know you'd look at a very long term, right? And which is what you would, which are the kind of investors who would have come in the anchor book,
right?
And which are the kind of investors you would want on your book as well, per se.
Absolutely.
But I'm still inclined to ask you, because one, there is a series of moves made by the government around raising discretionary consumption,
right?
And there is a series of moves made by the Reserve Bank of India,
right,
to try and help the NBFC sector per se.
Absolutely.
So is the timing very good for the short term as well?
So again, we've been through cycles, right? Through ups and downs, COVID years, managed, to continue to grow and continue to make money for the company and for our stakeholders. So for us, we really don't look at it as immediacy. What we're looking for is a business that's sustainable through cycles. And that's the reality in a growth market like India. We're not really looking at a market that's already well set into which we are trying to buy market share. Our focus has been, how do we create the market? How do we create customers? How do we create organized lending? And one of the things that is something that you'll find interesting is that while we are a subsidiary of HDFC Bank, we do not get any leads from the bank. And the 19 million customers I spoke about have been organically originated by this company since inception. So no inorganic growth, only organic growth. And for us, it's a long runway. We have a large product suite. We believe that when we look at our customers, which is what we call aspirational India, we say, what is it that this customer will need through his or her life cycle? And how do we address that requirement suitably? So for us, the customer is the hero, not the product. The product is really a journey, but how do we engage with the customer through their life cycle so that we can stay engaged with the customer?
Okay. I'm inclined to ask one more question before Mahima and Puneet also chip in. How do you see the next 3 to 5 years of this aspirational India growth working for you, considering the fact that for the longest time, we've been bucketed in a particular range of per capita for the average Indian.
Right.
And now we're seeing that rise and a larger portion of the upper end of the K really zoom up. How does that augur for a business like yours? Right.
So we say aspirational India, right? And I think one of the things that's really made the aspiration easy to access is technology, right? We have presence in 1170 towns, but the proposition that we have is, irrespective whether you're coming to us in a metro, a non-metro, or a rural market, our time to process your application is the same. So that's a proposition that we come with because it's on a digital backbone. Now that helps customers. And the other thing that's happened is that even a few years ago, most consumer goods companies would look at urban markets and rural markets separately. For example, if you went to a rural market, you'd find that the same brands have products at a different price point, packaged differently, priced differently. I think that's slowly going away thanks to technology and social media. People are saying, hey, this is what I get in Mumbai, London, or Dubai. This is what I want. And I think that's really driving aspirations. Plus, technology allows us to deliver that to that aspiration, right, profitably. And that's what we really look at, and that's how we think about it.
Nice.
Right. So I was just going through the brokerage notes for the IPO, and there was one thing that stood out was the hybrid model that the company has, and that's seen as a positive for the company.
That's right.
How do you see this working well for you, and I mean overall an outlook on how does this model work, and plus how is this a positive thing for you?
Okay. So as I said, we only do retail lending. Our top 20 customers is less than 0.34% of AUM. That's the level of granularity. We have no corporate loans, we have no real estate loans. But we work with a very heterogeneous group of customers. I said, think about an Indian sitting in Maharashtra, think of an Indian sitting in Assam, think of somebody sitting in Punjab. They speak different languages, have different sources of income, have different aspirations in terms of what their next requirement in life is. So for us, it's about how do we expand the funnel. And we expand the funnel by telling our customers, you choose the method by which you want to interact with us. We will provide you a best-in-class service. So whether it's a model where a customer comes to our branch, or whether he has a salesperson over at his workplace, or he comes to us digitally, the time taken by us to process his request is the same. Because the backbone is a tech backbone. And that's how we are able to expand the funnel through our phygital model.
Mr. Ramesh, just one question essentially in terms of, you mentioned about the aspiration in India that you're saying, that the packaging now cannot be different because the customer wants that aspiration and has that aspiration already. Your presence in tier 3, tier 4 towns has been something that's been talked about as well during the IPO.
That's right.
What is the path forward over the medium term? Do you expect to increase penetration into these tier 3, tier 4s? Or are you also looking at newer places that you can expand in terms of product suite? What could be the strategy going forward?
So 70% of our branches are in city number 101 plus, which is population 101 plus. So that's 70% of our distribution. And the way we think about distribution is that we really lead the work with our manufacturers to help them increase their sales. So in our asset finance business and our consumer finance business, we work with more than 100 manufacturers, right? Between all the consumer products, television, two-wheelers, commercial vehicles, construction equipment, more than 100 manufacturers. What we do is an exercise where we sit with them at least once a year, understand what is their strategy for growth, how do they see growth coming in across India, and where can we partner with them to help them sell more. So in the last 2 years, for example, we opened more than 250 branches. And to us, that's an endless tail in terms of how much more we can add. There's no constraint really in terms of the opportunity is really the constraint is our ability to invest and make a meaningful impact in the markets that we enter.
Mr. Ramesh, I would reckon that there would be a fair degree of liquidity out there in the offing for the near term. I know you're looking only at the near term, but I'm just trying to understand still. Would you, over the course of the next 2 to 3 years, pursue growth if it comes at a small cost of asset quality, or would the asset quality be the primary focus, even if it means that you have to let go of some growth, even as growth might be healthy per se for everybody?
Right. So if you look at our ALM statements over the years, you'll find that we are fairly conservative. We have a positive cumulative mismatch for 5 years, right? And so we're not the kind of business that borrows short, lends long, takes opportunistic calls based on predicting which way interest rates will move. We're saying we are a lender. We work on 101 principles, which is ability, intention, and induce. We don't do a trade-off. As a business, we make sure that we're balancing growth with profitability, because it's a cultural thing. You let off one for 3 years, getting it back is difficult. So, would I trade off asset quality for growth, or would I trade off, growth for profitability? The answer is that, it's a fine balance that we bring in, and that's what we want to do consistently for the next few years.
So you reckon that over the next 3 to 5 years, even if growth were to pick up, and if we see that pickup in growth numbers, let's assume the hypothesis is that we see a pickup in growth, it would still be accompanied by the asset quality that we've been used to from your organization.
That's right. Having said that, if there's a secular growth in India and the GDP picks up beyond where it is currently, you'll actually find that asset quality improves significantly, because customers have more money, and that's what's really reflecting in the higher GDP numbers. So a good high quality growth really results in customers having more liquidity, more money, and that enables them to expand their businesses and also improves asset quality.
You penciling that in when you're doing an internal 3-year growth target?
So yeah, when we do a 3-year growth target, we would look at which way India is headed, what are the macro and micro tailwinds, and if we believe that the next year is going to be a growth year, we would pencil it into our budgets.
Do you? Do you believe the next year is going to be the growth year, which will?
I'm optimistic about India, which is why I stayed back in India when half my classmates went overseas. I'm extremely optimistic about India, and so far I've been proved right.
Mr. Ramesh, just one on your product profile which you mentioned, because you specifically said consumer loans is one, but the MSME basket is also one. How has the product profile changed over the years, and what do you expect it to be in the medium term? Because we've seen a drastic change within MSMEs as well over the last 10 years. Right. What have you seen for yourself, and what do you expect it to be in a couple of years?
Right. So the MSME, which is, it's a large name for what we do. Yeah. MSME itself is a very big field now. I think it's up to 500 crores of investments, if I remember. So our ticket size are pretty small, compared to what even might qualify as MSME. For example, when we do secured lending in MSME, our average ticket size is about 4 million rupees. If it's an unsecured loan, it's about 300,000 rupees. So we're really looking at a smaller segment. And what we really do there in that business, which is about 40% of our book, is what we call the classical neighborhood lending. We identify a territory that we think is good credit, set up a branch there, and we will only lend to customers whom we can meet. Right? So that business, the MSME business, is 40% of our balance sheet. Even today, we'll only put out credit once after a credit officer has met the customer and is convinced that the credit is good to go. Right? So that's the level of granularity that we bring in. That business is doing quite well. So we really don't fund large manufacturing setups, and I said 500 crores is large. So our ticket size are pretty small. So we're really looking at retail trade as one of the big segments. Small manufacturers are a big segment. But again, the market is very heterogeneous. Think about Tirupur, think about Surat, or think about Jorhat. The local economy is very, very different. What we do is make sure that we are part of the economy that's really generating cash flows.
Interesting. Your gross advances mix, I was just seeing that in enterprise lending as compared to where it was in FY23, the share in terms of the overall mix has gone down, but consumer finance has gone up. Is this something that will continue, or are you expecting any change in the overall gross advance mix?
Right. So we started enterprise lending in 2008 when we started the company. We started asset finance in 2011 and we started consumer finance in 2016. So we had a product development process and thought process in terms of what we should be doing next. I said we want to make sure that any aspect of aspirational India, we should be having a suitable product so that we can fill in the gap. Given that consumer finance is a newer business, and if you take out 2016, 2 years of COVID, really it's a 5-year-old business, and we have a bunch of products. So that business being a newer business and a larger opportunity has grown. So it was about 13% 5 years ago. It's become 23% now. So that's a mix that will continue to change depending on the opportunity that we see.
Well, we wish you all the best for the issue. We look forward to talking to you on your listing day as well, because I'm sure it's going to be a rocking one.
Thank you, and thank you to you and all the viewers. Thank you so much.
No, not at all. Thank you for coming to the studio.
Thank you.